I'm Hans Lysglimt. This is May 14, 2010 market comments. Alright, the markets are holding up amazingly well, I must say. Thinking about, all the selling pressure and all the bad news that's starting to come out, and I hope people realize that this is just the beginning. There's tons of more bad news coming up. Gold's been trading at all-time high, 1249. Good for you. I've been telling you to buy gold for a very long time. You should still buy gold and hold gold. If you haven't bought gold yet, buy it now. It's going to be higher in a month and even higher in 12 months and so on. There's some volatility on the way, but if you didn't buy on the dips that were before, how do you think you're going to sort of mentally prepare to buy on the dips coming up? There will be dips, but in general, the trend, gold is going higher because currencies are going lower, and that's a given. You see what they're doing. There's new rescue packages, there's bailouts, they're printing money. And the thing is that we had a major correction. We've had a expansion of credit for a couple of generations, and this has stopped. So what the market needs is to realign to new circumstances. We need a new kind of economy. Certain industries are going to fail and go out, and new ones will pop up. Definitely, there's going to be new exciting stuff coming up. And this readjustment takes time, and it needs to be allowed to happen. But the politicians won't let it happen. They're propping up the economy and trying to, raise the economy like it used to be in 2007 by printing fiat money and pumping money into it. And what then happens is that you will see inflation. And you already see inflation in the stock market. I mean, the stock market has been booming when it really should be down. And this is because of the new money that's coming in, and that is inflation. But we don't think about it that way, at least not as long as the stock market is somehow sort of behaving and it's at least lower than the last all-time high and so on. I mean, if the Dow had been in 100,000, everybody would realize that this was due to mass inflation, new money. But now they talk of a recovery. Why not talk of a sort of, almost mass inflation or a boom based on new money and all that? No, it's a recovery all of a sudden because it's been higher before, and even though it almost fell down on itself, as long as it's lower than the last all-time high, it's a recovery. Yeah, right. The markets are going to, the reality is going to catch up with the markets eventually. And the reality is bad. The reality is that the markets, the financial markets, the real economy, it all needs a few years now, a number of years, to readjust to the new reality, to the fact that the credit expansion came to its maximum and contracted. And this is a natural thing. Nothing grows into the heavens, and then it retracts and it forms something new. And something new, I mean, we will have an economy 10 years from now, but it will be different. There will be different things. I believe that, there's way too many lawyers, there's way too many real estate agents, there's way too many, a lot of different things. But there's way too few acupuncturists, there's way too few masseurs. And if you look at people, you can sort of see them walking on the street. They're stiff and their muscles are all tight, but they have a Porsche, yeah, right, and they're driving their Porsche, right, and they're taking the Porsche to the garage for a fix-up and all that. What they need is a fix-up on themselves. They should buy an old Toyota and save the money and buy services from Missouri instead and get themselves together and be in better shape and all that. So that will happen. I hope that is the kind of new economy that will grow up. A new economy based more on health, on organic foods, on helping out each other as people, and the kind of Whole Foods kind of movement, that Walmart will be replaced with Whole Foods, all kinds of a Whole Foods lifestyle, the entire thing, without sort of the excesses of the snobbish things. I'm talking about the essence of the Whole Food movements. All right, so keep your gold, keep your silver. Silver's been rallying even more, but you know what I mean about silver. You know, it should be a part of your investment, but only a small part of it, because it's not really money the way gold is. So there's not that direct relationship between money and money growth and the amount of money in the world and the amount of silver in the same way that it is with gold. So be a bit careful about the silver, and I might even decide to sell some silver. I haven't done that, but I'm more pragmatic about silver than I am about gold. Gold I'm for all kinds of fundamental reasons. Silver I'm more for because it's a slight diversification from gold, so I'm not all in gold, and the fact that it usually, from historical trends, it plays a catch-up game with gold. So, but I would never have the majority of my investments in silver because it's fundamentally different. Okay, if you haven't sold, sell now, especially on the stock market. Okay, the euro is trending lower. It's at 125 towards the dollar now. It will go even lower, but both of them are heading towards zero. So they're both on this sort of, they're sliding down towards zero, but it's just that there's this volatility and relative volatility along the way. You can play that and you can make money off of that, and if you're lucky, you can make a lot of money playing that, And if you want to spend the time to sort of be on top of it and be able to analyze it and get it right, sure, do it. That's fine with me. But for most people, that's not the way to go, because it's too difficult, and you might as well lose money in the process. I mean, the Goldman Sachs guys are betting against you. What you can do, and that I've been recommending for some time, is to take out a mortgage in either euros or dollars and let the inflation work for you that way. If you can buy something really cheap, and I was in the U.S. this winter and looked at some real estate, but now when the euro has fallen so much, it's also interesting more and more to look at Europe. So, of course, geographically for Europeans, it makes more sense to buy in Spain or Greece than in the U.S., and vice versa. In the U.S., it makes more sense to buy in Florida. So all of a sudden, the kind of relative prices made it more interesting to look at Europe again. And this is something I see with some of my friends that are considering to buy something down in the sun. All of a sudden, they're looking at Spain again, while last year they were looking more to Florida. So sure, if you're looking into the market, I think this real estate market a year from now is going to be lower, both in the U.S. and in Europe. So there's no hurry. But if you start looking now and you find something that's fantastic, okay, you can consider buying it and hedging yourself really with a mortgage. All right. The madness is going to continue. It's really good to be in gold. I'm telling you, it's good to be in gold. So try to take some of the anxiety and the stress off your shoulders and go into gold. I'm going to do another video today. It's on what kind of returns you can expect on your investments long term. Because the problem is that most investors are overestimating by far the kind of returns that they're expecting on their investments. And they're saying, well, gold doesn't yield anything. There's no return on gold. Well, the thing is that you're comparing it to an illusion. You're not going to get the sort of 7% or whatever average return on your investment that you think you're going to get. You're going to get a fraction of that. And when you take that into serious consideration, gold becomes even more attractive. I'm going to make a separate video of that. So sell. That's my message.